you know, the earnings, all those sorts of reports, they're a snapshot in time. Okay, what we're seeing now, it's not a snapshot, it is a freeze frame of a 100-mile-per-hour fastball. And the question isn't where are the companies now, the question is, what were these companies doing, the companies doing 3 years ago to position themselves for the moment? This moment right now is a stress test. And look, some companies, they broke ground 3 years ago, some didn't. Some companies do very well on delivering on cost and on schedule and innovating at scale and at speed, and not all do. That's just the way it is. We're going to also be seeing a lot of noise, right? We're coming up on earnings. I will be very surprised if there's any war-related contracts that happen before this earnings period, just because of the speed at which the defense procurement moves. But as Sean mentioned, look, defense moves at a speed of its own, just because of some of the systemic things that we see. But you're going to see a lot of positioning happening, not just for the investment community, of course, but also for the end customer. And there's going to, you know, you're going to really have to sort of sift through and look through the noise and where the signal is. The other point I'll make is that when you look at backlog, and I was hoping Sean would say something like this, every contract that the government awards has something called the T for C clause, termination for convenience. And that's one of the other weird things, interesting things about government contracting. The government can just say, hey, thanks very much, nice doing business with you, bye. That's it, end of story, they can walk. And it's been upheld in court numerous times, every single contract. So when you sort of factor all this in, a lot of the things that look solid, they're not. We're looking at a snapshot, and what you can't see from the numbers is who's going to be able to seize the moment and who's going to be able to leverage the opportunity and who's not.